Hello, good day everyone. For today's video, we will be talking about Chapter 2, which is about accounting concepts and principles. So here is the chapter outline. We're going to talk about first the basic accounting concepts. Next are the accounting standards, where we are going to talk about the Philippine Financial Reporting Standards, or the PFRS, and relevant regulatory bodies. And lastly, the conceptual framework for financial reporting, where we will talk about the qualitative characteristics of useful financial information. Now, let us start with the definition of accounting concepts and principles. These are set of logical ideas and procedures that guide the accountant in recording and communicating economic information. So basically, these accounting concepts and principles serve as a guide on how the processes are done in accounting. Remember the processes of accounting, which are the identifying, recording, summarizing, and communicating processes? These accounting concepts and principles serve as the instructions manual for the proper way of doing accounting. Just like how doctors have their own way of properly taking care of their patients, or how dentists have their own proper way of extracting tooth. The same can be said in accounting. So these accounting concepts maximizes the usefulness of accounting information to the users. There are a lot of basic concepts that are from the standards, or our Philippine Financial Reporting Standards, or the PFRSS, the conceptual framework, or the generally accepted accounting principles, or the GAAP. We are only going to talk about 12 most common accounting concepts. The first basic concept is the separate entity concept. I have already discussed this in a couple of times in our discussion of corporation in our forms of business organization topic. Under this concept, the business is viewed as a separate person distinct from its owners. It means that once an owner who has money and uses this money to start his business, that certain money is no longer his money. So let's illustrate. Ikaw si Juan na kay 20,000 pesos. You use this money as the capital for your sari-sari store. Let us name the store as Juan's Sari-Sari Store. Now, kinsa may tag-iya sa kwarta karon? Si Juan or si Sari-Sari Store? Under the separate entity concept, ang tag-iya sa money is si Juan's Sari-Sari Store na. Now, suppose ang anak ni Juan is nangayo og pang-allowance nga 5,000 pesos. Adto gikuha sa capital sa business, and also, suppose na atay halin nga 1,000 pesos. We now have a net of 16,000 pesos. After 2 days, nangayo na sad si anak og additional allowance nga 2,000 kay pang GPA contribution kano. And also, suppose that you have 500 pesos as halin for the day. Now you have a net of 14,500. Now, here comes the next day. Juan's asawa nangayo nimo og 5,000 pesos, which is pangbayad daw sa motor. Now, you only have a net of 9,500 pesos. Now, if this trend goes on and on, what will happen to the sari-sari store? It will now become Juan's Sira-Sira Store. In the illustration, the business was treated as an extension of one's wallet. All the expenses unrelated to the business were recorded in the business. Remember that under the separate entity concept, only business-related expenses should be recorded and deducted to the business's accounts. Any unrelated accounts or personal transactions will be treated as a withdrawal of your investment to your business. The main reason why the application of the separate entity concept is necessary in accounting is to measure the business financial position and financial performance of the business. Next, let's talk about the historical cost concept or the cost principle. In this concept, assets are initially recorded at their acquisition cost. What does this mean? Let's consider this example. Suppose you are going to buy a printer from SM City Cebu for your printing shop and it costs 5,000 pesos. It's your lucky day because the printer you're going to purchase have a 20% discount. Thus, you bought the printer at only 4,000 pesos, taking advantage of the 1,000 peso discount. Now, which price or what amount would you record as the cost of the printer? Is it 5,000 pesos? Or is it 4,000 pesos? Or maybe 1,000 pesos? Which is which? To understand the concept, let me rephrase the question. At which cost did you acquire the printer? Pila man ang imuha na bayaran sa printer? Is it 5,000 pesos? Or 4,000 pesos? I guess you have now the answer. Therefore, under the historical cost concept, the printer should be recorded at 4,000 pesos, which is its acquisition cost. Next, let's talk about the going concern assumption. Under this concept, the business is assumed to continue to exist for an indefinite period of time. This means that for the financial reporting purposes, the business is assumed to continue doing its business in the foreseeable future, where the measurements of accounting will be meaningful. Now let's illustrate. One example of an asset is a machine. In accounting, naa man na siya gitawag na useful life. Dili ra sa duwa na ay life na asad sa machine. So for example, 5 years ang life ni machine. Naatay gitawag nga depreciation kung asa ang total cost or ang total value ni machine or machinery is makuhaan as time goes by. Marabag cellphone nga tag 10k but after 1 year dili na baya 10k ang value ana niya. Going back, without the concept of going concern, the measurement of this machine will not be properly stated, either magsubra or magkuwang. If the business is assumed to go on in a foreseeable future, meaning magamit nato ning useful life to properly state sa value ni machine sa karon na period. Okay, gets? Now, let us talk about the matching principle or the association of cause and effect. Under this concept, some costs are initially recognized as assets and charged as expenses only when the related revenue is recognized. Let's illustrate para masabtan. Let's say, for example, you are engaged in a merchandising business. Example, lato-lato. You have 100 pieces of lato-lato at 10 pesos each, so you have 1,000 pesos in total cost. In your books, since you are in a merchandising business, it will be recorded initially as assets in the form of inventories pending its sale or samtang wala pa ka nagbaligya or nakabaligya. Now, suppose nakabaligya na ka og 70 pieces of lato-lato. You will now make tanggal those lato-lato and recognize expenses in the form of cost of goods sold. To match or associate the revenues earned or sa pagbaligya nimo sa 70 pieces of lato-lato or 7,000 pesos with the expenses. Now, you have a remaining 30 pieces lato-lato in your inventories. So basically, under this concept, it requires the business to recognize expenses if there are revenues earned. It also recognizes that a business must incur expenses to earn revenues. Now, let's talk about the next concept, which is the accrual basis of accounting. Under this concept, economic events are recorded in the period in which they occur rather than in the point in time in which they affect cash. So under this one, the income is recognized when it is earned, or we have rendered the service regardless of when it is collected. On the other hand, when it comes to expenses, they are recognized when it is incurred regardless if when paid. Okay, para mas masabtan, we also have this so-called cash basis in accounting where income and expense are recognized if nakadawat na taog cash. Hence the name suggests cash basis. Let's illustrate. In September 1, gipalitan ka og lato-lato at giutang. And in September 5, dito pa ka gibayaran. So under the accrual basis of accounting, you will already recognize this as an income earned bisan wala pa ka nakadawat og bayad. In your journal, it will be debit accounts receivable and credit lato-lato sales. But under the cash basis of accounting, income is only recognized on September 5, the date nga gibayaran ka in cash. Another example. In September 1, ikaw ang nangutang og lato-lato sa imuhang supplier. Pero gibayaran ra sad nimo siya after or pagka September 5. Under accrual basis of accounting, you will already recognize this as the expense of your purchases of your lato-lato. And we have this account title called accounts payable. As you can see, even if we haven't paid it yet, or basically did not affect our cash during September 1, we already recognize the expense. In contrast to the cash basis of accounting, the expense is only recognized at September 5. So basically, the accrual basis of accounting states that we recognize income and expenses even before our cash is affected. Now, we will discuss the next concept, which is the prudence or the conservatism concept. Under this concept, the accountant observes some degree of caution when exercising judgments needed in making accounting estimates under conditions of uncertainty. Let's consider this example first. Suppose nagplano mo nga mga ligo og dagat or pool with your barkada. What are some of your expenses? It could be food, drinks, transportation, entrance fees, etc. Suppose your total estimate is 1,600 pesos. And kaibaw ka sa imong self and kaibaw sad ka nga imuhang mga barkada pro gastador tanan. So, would you still consider your budget to stay at 1,600? Of course, since you are expecting nga makagasto jud ka, your budget will become higher. So, it will become 2,000 pesos. Now, under this concept of prudence or conservatism, we encounter the term probable. Probable means most likely to happen, or it can be applied in times of uncertainty, or in layman's term, di ka sure sa imuha magasto or madawat. When it comes to this, recognizing expenses, if given the choices, we assume the higher amount. In recognizing income, also, if given choices or if we're uncertain, we assume the lower amount. So this is necessary so that assets or income will not be overstated or masubraan ang amount, or an expenses will be understated or masubraan og pagamay. So as you can see in the PowerPoint, expenses is whichever is higher and income is whichever is lower. Now let us talk about the next concept, which is the time period concept. Or this is also called periodicity, accounting period, or the reporting period concept. So under this concept, the life of the business is divided into series of reporting period. Please take note that users of the financial statements need timely information in order to make economic decisions. So for example, what if you started your business on January 1 and imuha papa mag-ask, "Nak, pinaman kita sa atong business?" Ang naman mo ingon kag huwat sa tag December 31 tay aron mahibaw-an nato ang ato a profit. It would be impractical to wait for a certain period of time to properly assess how the business is performing. The basic concept of this one is to divide the whole accounting period into short, equal portions called reporting periods or accounting periods so that decisions can be made in a timely manner. Our reporting period is usually 12 months, although we have longer or shorter ones. Like for example, 12 months is annual, 6 months is semi-annual, 3 months is quarterly, and 1 month is monthly. We also have two types of 12-month reporting period, which is the calendar year period and the fiscal year period. Okay, so calendar year period starts from January 1 up to December 31, while the fiscal year period starts on the month of the year or any month of the year until it covers the whole 12 months period. That is from, for example, July 1 to June 30 or March 1 to May 31, as long as it completes or covers the whole 12 months. Now, let's proceed to the next concept. The next concept is the stable monetary unit concept. Under this concept, assets, liabilities, equity, income, and expenses are stated in terms of a common unit of measure, which is the Philippine peso. The purchasing power of peso is regarded as stable, meaning inflation is disregarded. For example, if there is a $10 income or $10 income in the operations of your business, it should be translated or converted into the Philippine pesos using the current exchange rate. Now, let's proceed to the next one, which is the materiality concept. This concept guides the accountant when applying accounting principles. This is because accounting principles are applicable only to material items. So an item is considered material if its omission or misstatement could influence economic decisions. In this concept, we focus on the professional judgment in terms of the size and nature of the item being judged. So let's illustrate. Suppose Juan's sari-sari store with a capital of just 20,000 pesos versus 7-Eleven convenience store with a capital of course, millions. So you discovered a 500 pesos shortage in the cash of both businesses. Do you think that these 500 pesos shortage will matter to 7-Eleven? I think not. Mura ra nag-abog para nila. In contrast to Juan Sari Sari store, it is already considered a material amount of shortage. In this case, the gap on the size and nature between the two businesses are too wide. The market of the Sari Sari store is just in the Changi of a certain city or municipality. But on the 7-Eleven, it is nationwide. So another illustration, say for example, nipalit kag lato-lato nga tag 99.90 cents. Imuha gibayad is 100 peso bill. So naa kay sukli dapat nga 10 centavos. Pero pangutana, nangayo ba ka sa sukli? Most likely dili na. Since this 10 centavos is considered immaterial to you. However, kung naatahay kay Chinese blood, niya imuha principle in life is dili mapurma ang 1 million kung y centavos. So, mangayo jud kas 10 centavos na sukli because it is considered material to you as per your Chinese tradition. Please take note that there is no specific rule as to how much is the amount to consider as material. This is simply just a matter of professional judgment and depends on the facts and circumstances surrounding the entity. Now, let's talk about the cost-benefit principle. This concept is very simple. The costs of processing and communicating information should not exceed the benefits to be derived from the information's use. Simply, the cost should not exceed the probable benefits. This just focuses on the cost of providing information to the interested users. Next concept is the full disclosure principle. This principle is directly related to our notes to financial statements. This means that information should provide sufficient detail to disclose or include matters which may affect the decisions of interested users and should keep the information easy to understand. This is the application of our concept in the types of information, which is the qualitative information, remember? Any information that could potentially affect the decisions should be disclosed or stated in the notes to FS. Now, lastly, our last concept is the consistency concept. Under this one, it requires the business to apply accounting principles consistently and presents information consistently from one period to another. In other words, accounting policies used this year must also be applied the next year. Now let us try to apply all the concepts in the following example. Okay. Please read together with me and let's try to answer which accounting concept is used in each of the following related sentences. Let's start with the first one. During the year, you started a business of selling personalized mugs and t-shirts. You opened a separate bank account for the business and deposited your initial investment of 250,000 pesos to this account. So what do you think this concept? So this concept is the separate entity concept. As you can see, you opened a separate bank account for the business. Remember that the business, your money, if you are going to invest that in a business, it's no longer your money. It's the business's money. Okay, let's proceed to the next example. The business acquired a printing machine. The regular selling price is 100,000 pesos. However, you were able to acquire it at a discounted price of 90,000 pesos. You will record the machine at its acquisition cost of 90,000 pesos rather than at the regular selling price. Okay, I have already mentioned this example in the discussion. So, this is historical cost concept. Okay, so you will record the printing machine at its acquisition cost. Next. The business acquired initial inventory of mugs and t-shirts for a total cost of 50,000 pesos. You will record the cost as an asset, that is inventory, rather than as expense. Okay, what do you think this concept is? This concept is the matching concept, or the association of cause and effect. Okay, as you can see, the mugs and t-shirts are temporarily recorded as assets pending its sale in the form of inventories. Let's have the next one. All the inventory was sold on credit for 300,000 pesos. You will immediately record the credit sales as accounts receivable rather than waiting for them to be collected. Okay, what do you think this concept is? Alright, so this concept is the accrual basis of accounting. Okay, as you can see, the sales was recorded regardless of when paid. So income is already recognized even if collection is yet to happen. Okay, let's have the next one. Also, you will now record the 50,000 pesos cost of the inventory as expense. Okay, what concept is this? This is, again, the matching concept. Okay, since the inventory of t-shirts and mugs are temporarily recorded as assets on your books, so since it is already sold, it will now be recorded as an expense. Now let's go to the next one. You collected 290,000 pesos out of the 300,000 pesos total credit sales. You will deposit the collections to the bank account of the business rather than to your personal account. Okay, again, this is easy. This is the separate entity concept. The collections of the business belongs to the business. Let's have the next one. The debtor for the remaining 10,000 pesos is in financial difficulty. This has raised a doubt on whether he can pay his account. You will immediately recognize the doubtful account as expense. So what concept is this? This is prudence and accrual basis of accounting. Prudence because the debtor is in financial difficulty. So you are going to expect that this debtor has dili sure if he can pay the account or not. So you already recognize this one as uncollectible, but on an accrual. So accrual basis is used on this part. You already recognize the doubtful account as expense. Okay, you will only record this expense if the debtor has or wala jud kabayad si debtor. So as part of the accrual basis of accounting, in this problem, there is an account called allowance for doubtful accounts. So pending samtang wa pa na sure nga dili nakabayad si debtor, you will set up this allowance for doubtful accounts. And then once nga dili na siya makabayad, you will now recognize it as doubtful account expense. Okay. Now let's proceed. You withdrew cash of 80,000 pesos from the business for your personal use. You will record this transaction as a withdrawal of your investment from the business rather than a business expense. Okay, this is easy. This is the separate entity concept. Again, any expenses that are not related to the business will be considered as, or any personal expense can be considered as a withdrawal from your investment to the business. Now let's go to the next one. At the end of the year, you prepare the financial statements of your business to determine, among others, whether the business has earned profit. Okay, at the end of the year, this concept is the time period concept, wherein you divide the accounting period into short period of time in order to determine the performance and position of your business during that period. Let's have the next one. When preparing the financial statements, you discovered that the business has $10. You will translate this to Philippine peso using the current exchange rate. The amount that you will report in the financial statements is the translated amount. Okay, this is easy. This concept is the stable monetary unit. Okay, if you need more time, you may pause the video. Now let's have the next one. Also, you have found out that the regular selling price of a new printing machine increased from 100,000 pesos to 120,000 pesos. You will ignore this information and report the printing machine at its acquisition cost of 90,000 pesos in the financial statements. This is because you don't intend or expect to close your business in the foreseeable time. Okay, in this example, we have three concepts. Okay, let's start with the first asterisk. You will ignore this information. Okay, and the second with the two asterisks, acquisition cost, and the third one, 3 asterisks. Okay, let's check. So the first one is the stable monetary unit. Okay. The stable monetary unit. So in this concept, the prices of the machine are considered stable at the time it was purchased. So even if the regular selling price of the new printing machine increased from 100,000 to 120,000, it will not affect your cost under this concept. Next, historical cost. Okay, historical cost, you will record the printer at your acquisition cost, and the going concern, you don't intend or you assume that your business will continue its business in the foreseeable future. Next. During the year, the business bought a trash bin for 80 pesos. You expect to use this over several years. However, because you deemed the cost as immaterial, you will record this as an expense rather than an asset. This is very easy. You already have a clue. This is the materiality concept. You consider the trash bin 80 pesos cost as immaterial. Next, moreover, when you prepare the financial statements, you decided to include the cost of trash bin in a miscellaneous expenses account together with other immaterial expenses. You don't expect users of the financial statements to benefit from reporting the immaterial cost separately. Okay, you have the keyword there. This concept is the cost benefit concept. Okay, so you assume that in the preparation of your FS, it is already immaterial to declare the miscellaneous expenses as part of your FS. Next, you will make a brief description of the miscellaneous expenses account in the notes to financial statements, sufficient for users to understand the nature of this account. Okay, basic. So, notes to FS is the clue. This concept is the full disclosure. Okay, since you decided not to include the miscellaneous expenses in your financial statements, therefore, this one should be explained, or you should have notes to the financial statements explaining why you did not include this account, in order for the users of the financial statements to understand why. Okay, you have to fully disclose everything. Next, you then adopted an accounting policy of expensing outright all acquisitions of equipment costing 5,000 pesos and below. You will apply this policy consistently in the future periods. Okay. Your policy or your accounting policy is to expense any equipment costing below 5,000. Okay, this is your own policy. So you already have a clue. This is the consistency concept. Next. Alright. So that is the last part of the examples. I hope that you understood the basic accounting concepts with these examples. Okay. Now that is the last part, that is the last part of the first part of our video. Okay, now let us go to the next part. This is the second part, which is about the accounting standards. In accounting, our standards will refer to the Philippine Financial Reporting Standards, or the PFRSs. This is also called the Generally Accepted Accounting Principles. The PFRS are standards and interpretations adopted and issued by the Financial Reporting Standards Council, or the FRSC. The FRSC is the official accounting standard setting body in the Philippines. The PFRS are patterned from the International Financial Reporting Standards, or the IFRSs, which are issued by the International Accounting Standards Board, or the IASB. So meaning, the standards that we use in the Philippines are similar to the ones used in other countries worldwide. Okay, so we keep on saying these standards, but what makes it different from the accounting principles and accounting concepts? What makes it different? Kung sa may kalahian nila sa concepts versus standards. So just like the accounting concepts and principles, the standards are used as a guide in properly doing the processes in accounting. However, the standards indicate a detailed way of how to apply the concepts. Okay. Now, say for example, it's more like I'm saying that the concepts or principles say how you brush your teeth, and the standards say how many times a day you brush your teeth or what kind of toothbrush you should use. Okay, so aside from the FRSC, there are other regulatory bodies that are relevant in the accounting policies. The first one is the Securities and Exchange Commission, or the SEC. The SEC is tasked with regulating corporations, including partnerships. The SEC requires corporations and partnerships to file audited financial statements. The second one, the Bureau of Internal Revenue, or the BIR. The BIR is tasked in collecting national taxes and administering the provisions of the tax code. Although the provisions of the tax code do not always reflect the goals of financial reporting, they do at times influence the choice of accounting methods and procedures. Next is the Bangko Sentral ng Pilipinas, or the BSP. The BSP is tasked in regulating banks and other entities performing banking functions. The BSP influences the selection and application of accounting policies by these businesses. Okay, and the fourth one, Cooperative Development Authority, or the CDA. The CDA is tasked in regulating cooperatives. The CDA influences the selection and application of accounting policies by cooperatives. Okay, so those are the other regulatory bodies. There are other regulatory bodies out there, but these are just the main ones who influences the accounting policies of the businesses. So that concludes the second part of our video. Okay, that was a very short part of our video. Now let's go to part 3. So now let's talk about the last part, which is about the conceptual framework. What is this? How is it different to the accounting concepts and the PFRSS? So how do they differ? Number 1, the conceptual framework mentions about the traits on how to determine whether a certain information is useful to others or not. So basically, the conceptual framework is a theoretical framework that supports the development and application of accounting standards like the PFRS. It provides a solid foundation for understanding the why and how of accounting. Next, number 2, accounting concepts. Accounting concepts or principles are fundamental principles that guide the practice of accounting. While the PFRS, or the Philippine Financial Reporting Standards, are the specific accounting standards used in the Philippines. This is a more detailed guide. Okay, now to summarize, so the conceptual framework are the theories, the why and how of accounting. The concepts and principles are the guide, while the PFRS is the detailed guide. Now, let's talk about the next one. Okay, so in the conceptual framework, it mentions about the traits on how to determine whether the certain information is useful to others or not. So these are called the qualitative characteristics. So basically, these qualitative characteristics are a sort of a criteria on whether this information is useful or not. So these qualitative characteristics again are considered a criteria in determining the usefulness of the information. These qualitative characteristics are classified into 2, namely the fundamental qualitative characteristics and the enhancing qualitative characteristics. So let's talk about the fundamental qualitative characteristics first. So the fundamental qualitative characteristics are the core qualities in order for the financial information to become useful to its users. So core qualities. The fundamental qualitative characteristics are as follows. We only have two. And let's talk about the first one, which is the relevance. So relevance. Relevant information is capable of making a difference in the decisions of users. For an information to be relevant, it must have the following aspects. First one is the predictive value. If the information can help users make predictions about future outcomes, that is the predictive value. Second, confirmatory value. If the information can help users confirm past predictions. And lastly, materiality. Materiality is entity specific, meaning it depends on the circumstance and facts surrounding the entity. If the omitted or misstated information could influence the decisions of the users. Okay, so to understand or to further understand these concepts of relevance and the aspects of predictive value, confirmatory value, and the materiality, let's illustrate. So for example, you are going to buy a smartphone under limited budget. So you have a limited budget and you want to make a smart purchase. So in this scenario, of course, if gusto ka mangita og nindot nga smartphone, you will do a research first. You will simply Google search the latest phone that will suit your budget. Now let us break everything down. Now let's talk about the predictive value. So the predictive value, you research different smartphone models, their specifications, and user reviews. You found out that some models are known for their durability and performance. This information allows you to predict that these smartphones will likely to last longer and provide a better user experience, which is valuable for your decision-making process. Okay, all this information that you found will be valuable to your decision-making. Now let's talk about the confirmatory value. Okay, after reading reviews and gathering information, you finally decided on what phone that you want to buy. Fortunately, imoha friend na ay ingadto nga phone. You ask your friend about their experience and they confirm that the phone performs well and has met the expectations. So this confirmation adds to your confidence in your choice. Okay, since you confirm with your friend about the specs, so of course it will boost na mo go na ka sa phone. Now let's talk about the materiality. So since you have a specific budget and some smartphones exceed that budget, you consider the price as a material factor because it directly impacts your ability to make the purchase. You focus on smartphones within your budget, ensuring you pay attention to the most relevant information for your decision. Okay, so that is about the relevance. Now let's talk about the second fundamental qualitative characteristic, which is the faithful representation. So faithful representation means that information is factual or it represents actual effects of events that have taken place. So it has also three aspects, namely completeness, neutrality, and free from error. So completeness. Completeness means that all information necessary for users to have a complete understanding of the financial statements. Okay, completeness, it's very self-explanatory. Next one, neutrality. Again, another self-explanatory concept. It's just basically mean free from any bias. Thirdly, free from error. This information is not materially misstated. So there are no errors in the description and in the process by which the information is selected or applied. Okay, now lastly, let's talk about no, before we talk about that one, all the aspects of the faithful representation, fundamental qualitative characteristics are very self-explanatory. Okay, so let's proceed to the last part, which is the enhancing qualitative characteristics. So what are these? So these further enhances the usefulness of the information but are considered of secondary importance. Okay, from the word itself, enhancing. Okay, let's talk about these traits or these characteristics. Let's have the first one. The first one is comparability. Comparability refers to the ability to compare financial information between different periods or across different entities. Next, verifiability. Verifiability means that the information provided can be independently verified or confirmed by other parties, or simply, if different users could reach a general agreement as to what the information intends to represent. Third, timeliness. If the information is available to users in time to be able to influence their decision. And lastly, time understandability. If the information is presented in a clear and concise manner. Okay, so let's illustrate using the same example given in the relevance. Okay, but this time in the context of enhancing qualitative characteristics. Okay, the same example, buying a smartphone under limited budget. Now let's talk about comparability first. So comparability. In the context of buying a smartphone, comparability would mean that you can easily compare information about various smartphone models and their features. So for example, you compare the specifications or the specs, the prices, and user reviews of daghan na smartphone models and also their features. Especially different models from different brands, and in order for you to determine which one offers the best value for your budget. The goal here is to make an informed choice by having a clear basis for comparison. Okay, so in comparability, you can compare different models and suit that for your budget. Now next, verifiability. So in verifiability, when buying a smartphone, verifiability is essential. You rely on independent sources. So what do you mean by independent sources? So these independent sources mean that the online reviews or mga reviews ni YouTube, Mary Bautista for example, or any other content creators that reviews smartphones. You also have the product specifications and user feedback. You're going to use all of these to verify the claims made by manufacturers and retailers. Okay. So verifiability in the concept na dili ka magpailad sa what the retailers or how the smartphones are being advertised. Because sometimes the advertisement of that certain phone is different from the actual usage. So that's why you need to verify this information to those people who actually use the smartphone. So that's why you will watch reviews. Okay, so in this way, you ensure that the information you use to make your decision is reliable and trustworthy. Now let's have the next one, timeliness. Okay, so in the smartphone example, timeliness means that you have access to up-to-date information about the latest smartphone models and their features. You want to know about the new releases, software updates, and pricing changes as they happen. Timely information ensures that you can make a decision based on the most current data available, which is especially relevant when technology products like smartphones evolve rapidly. Okay, of course, you need updated information with regards to especially the price since you are in a limited budget. Now, let's have the next one, understandability. In the context of us buying a smartphone, it means that the information about the smartphone specs, features, and pricing is presented in a way that is easy to understand for people with limited technical knowledge. So, manufacturers and retailers of the smartphone should use simple language, clear visuals, and user-friendly formats to help you understand the details and make an informed choice without confusion. Okay, so that ends the concept or the topic about the enhancing qualitative characteristics. Okay, so that concludes our video for today. I hope that you have learned and understood the accounting concepts and principles in this video. So for more videos, don't forget to like the video, or don't forget to give this video a thumbs up and subscribe to my channel. So of course, I will give credit to the following: SlidesCarnival for the presentation template, Paxels for the photo, financial. The book used for this discussion is the Financial Accounting and Reporting Fundamentals 2023 edition by Zeus, Vernon, Millan. And that's all. Okay, goodbye, have a great day.